Well, today's fall on the share market means the index has lost 2.5% this week and is down to where it was last November. Today's fall, for once, wasn't led by the mining stocks but by oil producers and banks. The Aussie dollar is back to just above the 63 US cent mark, having dropped below it 5 times in the past 24 hours. Now, this chart shows the US dollar versus the Australian dollar, which is just the usual Aussie exchange rate upside down, against the US dollar index, which is the greenback against its major trading partners. Now, it's up more against the Australian currency than it is against the rest, which I think is due to the fact that market punters now think Australian interest rates have peaked, whereas in the US, they probably haven't. Now, last night, the US dollar wasn't affected by the latest carry-on in Congress with the removal of Republican Speaker Kevin McCarthy, but the share market was. It fell 1.3%, leading to heavy falls in Asia today as well. Now, McCarthy got sacked because he didn't push for more spending cuts before agreeing to pass appropriation bills, so the government didn't shut down. Now, here's a graph of the US budget deficit. The problem they're dealing with is the legacy of Republican presidents. And the other thing that has increased a lot in the US since 1980, along with the budget deficit, is CEO compensation as a multiple of the average wage. It's gone from 30 times to 344 times. Finally, oil went up last night, but iron ore and base metals fell. And that's finance.